Sometimes the toughest questions are the ones we avoid the longest. And how much life insurance do you really need? Is one of them. Most people wait until something goes wrong before they even think about it. Today, we're not waiting for that moment. Think of this as a calm, clear conversation that finally gives you the answers you've been looking for. No jargon, no confusion. Life insurance isn't about predicting the future, it's about preparing for the parts you can't control. That preparation is what protects the people you love most. And that protection starts with understanding the right amount of coverage. Most people in America don't have enough coverage because they underestimate their long-term financial needs. It's not their fault, because nobody teaches this in school. So today, we break it down, step by step. The simple truth is that your coverage should reflect your actual life, not generic advice. Your income, your debts, your goals, and your family shape the number. That's why this calculation is personal. If you have dependents, your coverage needs instantly increase. Financial responsibility expands with every person who counts on you, and that responsibility continues even when you're gone. One of the biggest mistakes people make is choosing the cheapest policy just to get something. That usually leaves families unprotected when they need help the most. So the first principle is accuracy, not convenience. A common baseline used by financial planners in the U.S. is the 10 to 15 times income rule. It offers a quick estimate when you don't know where to start, but it's still only a starting point. If you earn $60,000 per year, that rule suggests $600,000 to $900,000 in coverage. For many households, that amount provides stability for years. But again, personal factors matter. Your children's ages influence the number significantly. Younger kids mean more years of support ahead. Older kids may need less. Education costs also shape your coverage needs. College and trade school requires significant funds. Planning for that gap now removes stress later. Debt is another major factor. Mortgages, car loans, and credit card balances don't disappear automatically. Without coverage, these responsibilities fall on the family. Think about your mortgage as a key component. Many families choose a policy that can at least pay off the house. Owning the home outright protects long-term stability. Next, consider income replacement. Your family may need several years to adjust financially. A proper policy gives them breathing room. Healthcare costs during final illnesses can also become a burden. Some policies help cover these unexpected expenses. That relief prevents financial shock. Even funeral costs in the U.S. can be higher than many expect. The average cost ranges from $7,000 to $10,000. Coverage ensures your family doesn't absorb that expense. If you're the primary earner, the stakes rise even more. Your income is the foundation of your household, and that foundation needs protection. For two-income homes, people sometimes assume they can go with less coverage, but losing one income still disrupts everything. Bills, childcare, and long-term plans all shift. Your lifestyle goals also matter in this calculation. Families want stability, not survival mode. Adequate coverage keeps them from dropping their quality of life. If you have young children, think beyond today's bills. Consider childcare, school fees, and future opportunities. These long-term needs shape your final number. If you're older with grown children, your needs may shift. You might prioritize paying debts and supporting a spouse. Each stage of life changes the math. Inflation also affects your coverage needs. A policy bought today must still matter 10 or 20 years from now. Building inflation into your estimate protects against future price increases. If you run a small business, you need to factor that in. Your business may have loans, partners, or obligations. Coverage ensures the business can survive the transition. Health also plays a role, though not in the way most people think. Good health makes policies cheaper and easier to qualify for. Waiting too long only increases the cost. Your coverage length matters as well. Many families choose term life because it's affordable. Term options usually run 10, 20, or 30 years. Choosing the right term depends on your goals. You match the term with the years your family needs support. That strategy prevents gaps. Permanent life insurance serves different purposes. It can build cash value and last your entire life. But it's more expensive, so needs must justify the cost. Your financial future also affects your coverage targets. If you plan to retire early, you might need shorter coverage. If you plan to work late in life, the timeline shifts. Think about the emotional side too. Families facing loss shouldn't face financial chaos. Insurance fills that emotional and financial gap. Many Americans don't talk about money openly. That silence causes confusion and hesitation. But understanding your needs brings clarity. Your age matters in this calculation as well. Younger buyers get lower premiums for higher coverage. Older buyers pay more, so early planning helps. If you're in your 20s or 30s, your life is expanding. New jobs, new families, and new responsibilities appear. Coverage during this stage is crucial. If you're in your 40s or 50s, your focus may shift toward asset protection. Your children may be older, and your income may be higher. Coverage ensures your progress doesn't collapse. Your emergency fund also influences your coverage. The stronger your savings, the fewer gaps insurance must fill. The weaker the savings, the more coverage you need. Don't forget retirement savings. If your spouse depends on your 401k or pension, a policy keeps those plans intact. Without protection, retirement timelines collapse. Think about taxes and estate considerations too. Some policies offer advantages for estate planning. This protects generational wealth. Look at your long-term goals honestly. You're not just protecting bills, you're protecting your family's future. That goal requires accuracy and thought. Your income growth matters as well. If you expect your earnings to rise, your coverage should reflect that. Planning for future income protects future goals. A major error is forgetting stay-at-home parents. Their labor has real financial value in childcare, transportation, and home management. Coverage ensures the family can replace those services. Another mistake is relying on employer or provided insurance alone. Workplace policies usually offer limited coverage. Losing your job means losing coverage instantly. Always calculate your personal needs independently. Your employer's plan can be helpful, but it shouldn't be the foundation. Personal coverage is stable and portable. Review your coverage regularly. Major life events should trigger updates. Marriage, children, promotions, or big purchases all demand adjustments. Don't be afraid to get professional guidance. Financial planners and licensed agents use tools to calculate your needs precisely. Their insights simplify the process. Ultimately, life insurance is about control. It gives your family stability when life becomes unpredictable. And that stability brings peace of mind. Without proper coverage, families often face financial hardship after loss. Bills continue even when income stops. Insurance bridges that painful gap. Think of coverage as a safety net woven from love and responsibility. The size of that net depends on your unique life, and only you can define how strong it should be. Once you'll run the numbers, the right amount becomes clear. It's not about fear, it's about preparation. Preparation is an act of care. The final step is taking action. The perfect moment won't magically appear. But peace of mind begins the moment you secure the protection your family deserves. When you choose the right amount of life insurance, you're choosing stability for the people you love. You're choosing confidence in their future, and that choice lasts long after you're gone. In the end, the real question isn't how much insurance do you need, but how much security do you want your family to have? That answer guides everything. And as you move forward, remember that the right coverage isn't an expense, it's an investment in your family's long-term well-being. It protects their home, their dreams, and their future. And that is something you can never put a price on. Whenever life changes, adjust your plan. A policy should grow with your responsibilities. That process keeps your family protected at every stage. By understanding your needs clearly, you avoid guesswork and underprotection. This clarity leads to smarter decisions, and smarter decisions build stronger futures. Your family deserves stability even when you're no longer there to provide it. Insurance ensures that stability remains intact. That is the true value of proper coverage. So take a moment to think about the people you care about most. Think about what you want their lives to look like, even in your absence. That vision is what determines your ideal coverage. When you look at life insurance through this lens, the calculation becomes simple. It's no longer about numbers, it's about responsibility. And responsibility is something worth honoring. Thank you for taking the time to understand this fully. Most people avoid this conversation, but you chose clarity. And that choice protects your family more than you realize.